Now, if there are two or more owners, the LLC is going to be taxed as a partnership. Now, what this means is the LLC is going to file a Form 1065. This tax form is due on a different date. It's due earlier than the regular 4/15 deadline is due on March 15th. So that's something to be aware of. And it can have higher costs. An individual return is way cheaper than a partnership return.
Over 50% of Black Americans are unmarried, and only 2% of Black families in America have a net worth over $1 million.
We are on our journey to not only join that 2%, but grow that 2%.
Facts. I'm Devon Truvel, creator of Black Wall Street, the board game, with my beautiful co-host.
I'm Sinclair, aka the Health Nerd. You can go to our website at them4show.com, our Instagram at them4show, and our YouTube channel at Melanated Married Millionaires in the Making.
And welcome to the M4 Show.
How your tax is going to be dependent upon how the LLC is set up. So if the LLC has only one owner, it's going to be taxed the same way as a sole proprietorship, where you're going to file your individual return, your 1040, and all of your business income and expenses are going to be included on a Schedule C. Now, LLC is recognized by the IRS as a disregarded entity, which means it's not separate from its owner. And that's why you just file out your individual form and add the Schedule C to it. Now, if there are two or more owners, the LLC is going to be taxed as a partnership. Now, what this means is the LLC is going to file a Form 1065. This tax form is due on a different date. It's due earlier than the regular 4/15 deadline is due on March 15th. So that's something to be aware of. And it can have higher costs. An individual return is way cheaper than a partnership return. So that's something to keep in mind. And then also, if your LLC is having to file as a partnership, you need to be aware that the business itself is going to be reported on the 1065, and then the owners are then going to be responsible for completing their individual tax returns. And then also an LLC can be taxed as an S Corp. An S Corp is not necessarily a separate entity, as a lot of people refer to it as. It's actually a tax selection.
All right, we're going to get back to the episode in a second, but breathe if you've ever had a brilliant idea. I'm pretty sure everybody just took a breath right there, right? Because we all have amazing ideas, but I got a question for you. What's stopping you from taking that idea and actually making it into a business, actually executing on your brilliance? My name is Devon Truvel, and in 2018, I was able to create, market, and sell my own product while still working a 9-to-5. And through the years, I've taken the lessons we've learned, the expensive webinars that I've gone to, and the dozens of business books that I've read, and I've discovered 7 simple steps to launch your business. If you're ready to take your business idea to the next level and make it real and start making profit from your passion, head to www.launchitcommunity.com and grab yourself the book. We've been able to make it very simple, affordable, and easier than ever to start that business while still working your 9-to-5. And we take entrepreneurs every single Friday and we talk to them. We teach them about how to use social media. We teach them about how to set up their Instagram account, how to use Shopify, how to use Printful, and other tools that can help you take your business to the next level, but not take tons of time away from your 9-to-5 and your busy life that you already have. So if you're ready to take that idea to the next level, make sure you head to www.launchitcommunity.com, get yourself a book, and join our free accountability calls. Now, let's get back to the episode.
And that is due on March 15th as well. The tax return for that is an 1120S, and it's a pass-through entity. Just it's similar to a partnership, how a partnership is filed, but there are certain differences in terms of how the owners and stuff deal with their taxation. So within the LLC, it can be kind of technical, but in terms of like what the business can write off and stuff, that's typically the same across the board. You still want to make sure you keep up with your record keeping. You still can write off like ordinary and necessary expenses. You just want to keep that in mind. If it's ordinary and necessary for my business, 9 times out of 10, your tax preparer can substantiate it so that you can write it off on your return.
Thank you for supporting the M4 show and our mission to increase the wealth of Black families.
If you received any value from this episode, any value at all, any, do us a favor and give us a like and subscribe on YouTube and Apple, Spotify, anything, all of them, all of them, wherever you're listening, go ahead and like and subscribe.
And after you like and subscribe, make sure you send this episode to at least one family that you really want to see win. We'll catch y'all next time. Peace.